silver's going to move a lot. We can have an argument. Is that really physical? Is it loading out? Is it just whatever? Is it just a warrant? It's more physical than this, which is nothing. Silver open interest threatens to break below 100,000 contracts. You can see here, this is the latest numbers for April 28th, and we are at 101,400 contracts. This is extraordinarily low. We have not been below 100,000 since the great financial crisis of 2008. The dearth of physical silver in London is forcing open interest lower. And so if open interest has to get higher because other people want to go long in New York, then they're going to have to mark up prices in order to encourage commercial firms to go short the metal. And they're going to need more metal in London, and it's going to cost more money. So the price of the silver is going to go up in order to support all of those short positions to be hedged in London. The share of US dollar holdings decreased to 56.77% in 2025 Q4. So if we just go back a little bit, 56.77%, that's slightly lower than where we are now. But what is contributing to that decline since 2021? Share of euro holdings decreased. And here's proof that I was going to show you that the silver bullet is physical and 2011 was paper. This is a very stark chart. You can see here, I drew all these wonderful little rectangles that I learned how to do in art class. And this shows the amount of deliveries, contract deliveries, going back 2006 as far as we have data. So we can see that in 2011, right when silver was approaching 50, right? This is that little spike that used to look really big until we got to this big spike over 120 in 2025, 2026. Whoa. So when silver was hitting 50, what was happening to deliveries? All-time low. Almost an all-time low for the data that we have. This is very, very anemic amount of deliveries. There was no deliveries happening. That's proof that the previous run to 50 in 2011 was all speculative paper nonsense. And here we have this other rectangle at the end of 2020 when there was a spike in silver after the big COVID printing bonanza craziness. We had a record number of contracts, about 16,500 contracts of silver. Multiply that by 5,000 to get the amount of ounces, and that did cause a spike in the price from about $11 to about 35, 36, something like that. And we see here that we had a huge amount of persistent deliveries from 2025 all year, like near this record over here in 2020 that was hit for only 1 month, but persistent, huge amounts of physical deliveries of contracts. And okay, we can have an argument. Is that really physical? Is it loading out? Is it just whatever? Is it just a warrant? Okay, but it's more physical than this, which is nothing. We continue to see that elevated amount of deliveries here. And this spike has a lot to do with the fact that the deliveries on these little peaks over here are very, very high. So yes, we are in a physical demand market as opposed to 2011 when we were not. Silver open interest threatens to break below 100,000 contracts. You can see here, this is the latest numbers for yesterday, April 28th. And we are at 101,400 contracts. This is extraordinarily low. We have not been below 100,000 since the great financial crisis of 2008. And we have about 8,817 contracts left to either roll over or close out before May delivery deadline tonight, April 29th. So we have 8,817 contracts that potentially are going to be closed out. Probably going to be a little less than that because some of them are going to roll over. But is it going to be more than 1,400 to break the 100,000 mark? It's probably going to be more than that. And then more are going to close out when they're delivered as May continues. So we could get a low below 100,000 contracts as May begins. Let's say May 2nd, May 3rd, May 4th. If we get to about 90,000 contracts, I'm going to make some moves in silver, and I'll show you why that is. Because you can see here, the last time we were below 100,000 contracts in open interest, you can see the green area is open interest, and we broke below it here, and that was precisely where the major low in silver was at the end of 2008 at about $10. I think it was like $8.50. And from there, about a 2.5 year move up to 50. It's not going to take that long this time because things are going a lot faster now. And this move to we're at 100. We're about 100,000 now. So this is where we are now. Imagine the green over here. Silver is going to move a lot, I think, when open interest goes back up and the speculative fervor increases. And if you want to know what I'm going to be doing if we do get to 90,000, 85,000 contracts, somewhere in that area, I'm going to be working with some options, and it should be fun. So check out the Endgame Investor on Substack for that if you want to know. Does paper really suppress price? Well, you could look at this chart and say yes. The green is open interest. So you can see in this triangle, this is the trend line for open interest from the 2011 top at 50 to the 2020 bottom at about 11 during the lockdowns. So as open interest trended higher and higher and higher and higher, price trended lower and lower and lower and lower. So you could say that paper is being dumped on the market and manipulating the price lower. Fine, it's an argument you could make. I don't believe it, but you also see the opposite over here. The price trends higher and higher and higher and higher. Here's the top in January 29th. As open interest trended lower and lower and lower and lower, we're at 100,000 contracts now. It's not perfectly correlated, but it is a general pattern that we see here. And there's a lot of ups and downs and what have yous and ins and outs and all that stuff.
Before we wrap up, let's zoom out for a second. Because what we're watching right now is bigger than one headline, one candle on the chart, or one day of price action. This is not just about silver going up 50 cents or gold pulling back after a strong move. This is about something much larger happening in the global system. We are living through a period where trust is being tested everywhere. Trust in governments, trust in central banks, trust in currencies, trust in debt markets, trust in the headlines, and honestly, trust in the idea that the old financial system can keep running the same playbook forever without consequences. And that is exactly why gold and silver matter. A lot of people still look at precious metals and say, why would I care about silver? Why would I care about gold? They just sit there, they do nothing, they have no yield. That is the old argument. But the world we are moving into is not the same world that argument was built for. Because in a world of rising debt, geopolitical instability, currency debasement, weaponized trade routes, sanctions, proxy conflicts, fragile supply chains, and central banks trapped between inflation and recession, the thing that just sits there starts to look very powerful. Gold does not need permission. Silver does not need a bailout. Neither one needs a central banker to reassure you on television. And that is why every serious conversation about the future of money eventually comes back to hard assets. Now think about where we are today. Global tensions are not fading away. They are multiplying. The Middle East remains a pressure point. Europe is still dealing with long-term strategic instability. Asia is becoming more economically and militarily competitive. Energy corridors matter. Shipping lanes matter. Semiconductor supply chains matter. Food security matters. The dollar system matters. And every time one of these things gets shaken, markets start repricing risk. That repricing of risk is where gold usually gets the first spot. Gold is the monetary metal. Gold is the one central banks understand. Gold is the one they quietly respect, even when they publicly act like fiat is invincible. But silver is different. Silver is the metal that lives in two worlds at once. It is monetary, but it is also industrial. It is history and future at the same time. It is old money and modern technology in the same metal. That is what makes silver so interesting, and frankly, so explosive when momentum finally builds. Because silver is not just a shiny rock. It is used in electronics, solar infrastructure, industrial systems, advanced manufacturing, medical applications, and more. So when the world talks about green energy, electrification, reindustrialization, military tech, grid expansion, AI hardware, and supply chain security, silver is sitting right in the middle of all of it. That is why silver bulls never really go away. They may get mocked, they may get early timing wrong, they may have to sit through painful consolidation, but the core thesis keeps coming back because the metal keeps mattering. And let's be honest, silver has a personality that gold does not. Gold moves like a king. Silver moves like it just drank 3 espressos and saw a breaking news alert. Silver is calm until it isn't. That is why silver drives people crazy. It can look asleep for weeks, and then suddenly it moves like the market remembered all at once that above ground supplies are tight, demand is real, and the paper game only works until confidence starts slipping. That is the part many casual viewers miss. Most people only become interested in silver after it already made the move, after the breakout, after the headlines, after the FOMO starts, after the mainstream financial channels begin pretending they always understood the story. But real positioning usually happens when nobody is excited, when the comments are quiet, when the chart looks boring, when everyone is distracted by the next hot trade. That is how these markets work. And the geopolitical side only makes this more important. Every new conflict, every new sanction regime, every new currency settlement outside the dollar system, every new shipping disruption, every new defense escalation, every new energy shock adds stress to the financial architecture. Maybe not enough to break it in one day, but enough to weaken confidence over time. And markets run on confidence. That is the key point. The system does not need to collapse tomorrow for metals to matter. It only needs people to slowly realize that the system is not as stable, not as neutral, and not as durable as they were told. That is when gold becomes a signal. That is when silver becomes a story. And that is when retail investors, institutions, central banks, and everyday savers all start looking at the same assets from different angles. Some buy gold because they want security. Some buy silver because they want leverage to the same macro trend. Some buy both because they do not want all their faith sitting inside digits on a screen backed by policy promises and political incentives. And can you really blame them? Look around. Governments keep spending, debt keeps rising, currencies keep getting diluted, wars keep threatening trade, politicians keep promising stability, and ordinary people keep noticing that their money buys less than it used to. That is not conspiracy. That is lived reality. This is why gold and silver are not just investments to many people. They are a response, a hedge, a form of skepticism, a statement that says, I do not fully trust the system, and I want something outside of it. Now, does that mean metals only go up? No. Does that mean silver cannot be volatile? Of course it can. Does that mean gold cannot correct? Absolutely not. But zoomed out, the bigger picture is what matters. Precious metals do not need perfect conditions. They need persistent stress, and the modern world is delivering plenty of that. That is why, on this channel, we do not just stare at price charts in isolation. We connect the dots, because silver is not trading in a vacuum. Gold is not moving in a vacuum. Markets are reacting to debt, diplomacy, war risk, central bank behavior, inflation expectations, real yields, industrial demand, and public psychology all at once. That is why one random headline can move these markets. That is why one central bank statement can change momentum. That is why one geopolitical flare-up can turn boring metals into the most interesting corner of the market overnight. And this is where the memes almost write themselves. One day the mainstream says, nobody needs gold anymore. Next week, central banks are stacking it. One day people laugh at silver holders. Next week, they are posting rocket emojis after a $2 move. One day, analysts say inflation is under control. Next week, your grocery bill files an official complaint. That is the clown world element of markets. You can almost picture the meme. Fiat currency after another trillion in debt spending. I'm tired, boss. Or this one. Silver investors after waiting for months and seeing a 4% move. Everybody stay calm. Everybody stay calm. Or the classic energy of the metals crowd. They called me crazy at 22 silver. They called me lucky at 32 silver. They called me again at 40 asking what to buy. That is the emotional cycle in a nutshell. And if you want a few tweet-style lines to flash on screen during this segment, here are some that fit perfectly. Gold is not chasing the news. It is pricing the loss of trust. Silver is what happens when monetary anxiety meets industrial reality. Every empire prints. Every market pretends. Gold remembers. Paper promises are infinite. Real metal is not. Geopolitics is bullish for uncertainty. Uncertainty is bullish for hard assets. Central banks buy gold while telling you everything is fine. That should tell you enough. Silver does not move when people are comfortable. It moves when comfort breaks.